Good morning, good morning, good morning. Welcome to the final morning blast of the week. It looks like we made it. It is Friday, the 12th of September, all day. As usual, you join myself and the magnificent Mr. Michael Brown, where we will be giving you a review of what happened in markets and general news-wise yesterday, and a preview, because I always seem to get those two muddled up, of what's going on today, news-wise, what to expect in markets, etc., etc. I'll start with some tragic news this morning. It's been made clear to me this morning by Mr. Michael Brown that the TfL strike, the London Tube strike, is over, so there's no guess the picket line number. For those that have tuned in just for that, you might as well go and go back to whatever you were doing. I apologise. I've woken up especially keen as mustard this morning to play that game. That's not working. But anyway, I'll get the legals out of the way and we can crack on. Nothing discussed on the Spaces session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan, or indeed Michael. How are you, my dear friend?
Yeah, very good morning to you, Ryan. Good morning, everyone, and a very happy Friday as well. As you say, we've made it to the end of another week.
We have indeed. We have indeed. Second week of September already. Where
Oh,
is it
don't.
going?
It's
Where is it
flying
going?
by.
It's going to be my birthday week soon, and I stress week because I'm going to start making week-long celebrations. Unlike me, I know, but there you go.
Not that you ever normally need an excuse, Ryan.
Not that I haven't. No, I've been so. I have I've been sober all week.
Blimey.
Yeah, I know. I used to be a contender. Now look at me.
Shall we
Um,
um shall we call in a doctor?
you or someone. Yeah, crack on. Right, let's move on. Let's move on. What's been occurring?
Yeah, let's move on very quickly from that. In terms of where markets stand this morning and how we traded yesterday, it was very much a dovish vibe across the board. Equities trading high, the S&P and Nasdaq notching new record highs. The dollar trading a chunk lower against pretty much all major peers, and treasuries rallying quite hard across the curve, not only at the front end but also further out as well, with the 10-year yield trading below 4% very briefly for the first time since April. The reason for that, I would argue, is not the inflation data that we had out of the US yesterday, but it is instead the weekly jobless claims stats, which I will cover off first of all. Initial claims in the week to the 6th of September rising by 263,000, well above the 235,000 prior and the 235,000 consensus. And that is the highest level since October of 2021. Now, markets obviously looking at that in the context of not only the pretty poor August and July jobs reports, but also the benchmark revisions that we had earlier in the week, and logically coming to the conclusion that jobless claims print sort of fits into the wider jigsaw of a US labour market that is slowing and losing momentum at a rather rapid rate. I would just caution, though, that when you do dig into the data a little bit more, firstly, the initial claims print did pertain to, or did coincide, I should say, with Labour Day, and that may have skewed things somewhat if they were struggling with the seasonal adjustment around that. The second thing is that actually the upside in that claims metric was largely driven by a surge in jobless claims in Texas, where there have been some quite well-publicised layoffs recently, and actually claims in other states were relatively stable. So although the market did react quite aggressively to the jobless claims data, at one point we were fully discounting 3 25 basis point Fed cuts by the end of the year. I think we do need to see whether that becomes a trend before we start to ring any alarm bells more vigorously. As for the inflation numbers that we had out of the States yesterday, headline CPI rose by a marginally hotter than expected 0.4% on a month-on-month basis, although annual inflation came in at 2.9% in line with expectations. Core inflation rose by 0.3% on the month and by 3.1% on the year, both of those prints being bang in line with expectations. And while we did see core goods inflation rise to a 2-year high and we saw core services inflation hold steady at 3.6%, there's really nothing in that report that was especially surprising, and certainly nothing that is going to derail the Fed from delivering a 25 basis point cut at their meeting next Wednesday, particularly when Chair Powell has already flagged his view, and what's likely now a view of a majority of FOMC members, that tariffs are likely to lead to a one-off shift in the price level as opposed to any sort of more persistent price pressures. Away from the United States, of course, we did have an ECB decision yesterday. I think, frankly, the most interesting thing that happened during this ECB decision was our office fire alarm going off, which meant that I missed half of the press
Were
conference.
you
What a
having a
shame that was.
Were you having a tout in a trap two or something like that, or what's going on there?
It was not me, I assure you of that. Although there were some folk accusing me of that, knowing my hatred of all things Christine Lagarde,
I tell you what,
that it
though,
was me trying to get out of it.
first signs of autumn, etc. Nice big jacket, nice big coat she was wearing. I thought.
Indeed, almost as big as my green Aston Martin bomber jacket, actually.
I wondered where you were going with that, but thankfully you said a green Aston Martin bomber jacket. Okay, quickly moving on.
Deary me. In terms of that decision, though, the ECB holding the deposit rate steady at 2% as expected, while reiterating that they will continue to take a meeting-by-meeting and data-dependent approach to future policy decisions, and that they are not making any pre-commitment to a particular policy path. In terms of the latest staff macroeconomic projections, the near-term growth outlook was upgraded, largely as a result of the EU and the US having agreed a trade deal earlier in the summer. The ECB now see GDP growth of 1.2% this year, up from a prior 0.9%, although some of that has been pulled forward from next year, where growth has been downgraded to 1% from a prior 1.1%. On the inflation side of proceedings, the ECB continuing to project an inflation undershoot next year, but also now projecting an inflation undershoot in 2027 as well, with headline CPI seen at 1.9% that year, compared to the 2% that we had in the prior forecast round. Despite that, President Lagarde noting in her press conference, I should say, repeating in her press conference that the ECB is still in a good place when it comes to policy, which is the language she used in July and which markets interpreted to mean that the ECB is done and dusted with its easing cycle, while Lagarde also noted that risks to the economic outlook have become more balanced as opposed to the prior language around those risks being tilted to the downside. Unsurprisingly, money markets reacting relatively hawkishly, with now just 4 basis points of easing priced by year end and just 10 basis points over the next 12 months, while the euro also caught a bit of a bid on the back of that, which then extended on the weak jobless claims data that we covered a moment ago. We did also have the usual round of post-meeting ECB sources reports, again, very much in line with expectations, noting via Bloomberg that the ECB is inclined to keep rates unchanged, barring any economic shocks, which is pretty much the baseline that everyone had in mind anyway. Away from that and on to a few other headlines before I hand back to you, Ryan. On the trade front, the Treasury Secretary Besson is going to meet Chinese Vice Premier He Lifeng in Madrid next week, of course, continuing their trade talks that are basically never ending at this point. The 90-day truce, which is now a 180-day truce, is currently due to expire in mid-November.
Okay. Quick one. How many like more day kick-ons have we got until the end of the administration?
I believe it's 13 and a half now.
Oh,
if we keep going along the 90-day timeline. With that in mind, though, I would not be expecting anything concrete at all from these discussions that take place next week. The way this seems to be working is that they'll have a chat once every 6 weeks or so, but the only chat that really matters is the one that comes just before the deadline, or inverted quotes, deadline, of the pause, which is inevitably going to be extended anyway. Sticking with China, their Commerce Ministry, unsurprisingly, throwing a bit of a tantrum about Mexico planning to impose tariffs of up to 50% on autos coming from China. The Commerce Ministry in China saying this will seriously affect Mexico's business environment and the confidence of enterprises investing in Mexico. Really don't think they're going to be too bothered, lads, no matter how strong your language is. And lastly, on the trade front, having urged the EU to impose a 100% tariff on Russia and China earlier in the week, the US is now apparently going to urge the entire G7 to do the same thing. This is according to the FT, citing sources. Frankly, that's going to go about as well as it did when they asked the EU to do it. Namely, there is absolutely no chance of it happening. A few other headlines on the Fed front. President Trump's lawyers have lodged another application to various appeals courts in the United States. This is not around the actual ruling itself as to whether Trump can fire Lisa Cook or not. It's around whether or not Lisa Cook is actually allowed to sit on the Fed board and take part, I should say, in the FOMC meeting next week. Again, I don't really understand why Trump wouldn't want her there, given that it's pretty much guaranteed guaranteed she's going to vote for a rate cut, which is what he wants. But there we are.
Just on
The only people making out of this at the moment are the lawyers. Go on.
just on this, because I was trying to kind of read a story about this last night. Is it just me that gets really fucking confused with American legal systems? Because there's so many double negatives when you're reading a story. There's like 4 double negatives, and you're trying to catch up with, like, you just spend. I find half my time reading the article thinking, is this for or against whatever the proposition was?
Oh, it's an absolute nightmare.
It's like, oh God, yeah, it's like repeal the appeal against the repealed appeal, and I'm like, what the fuck is going on here? This is why I drink. But anyway, sorry, carry on.
Well, you don't.
Well, this is potentially this is why I didn't understand it.
Well, maybe, yeah. After a couple, it make complete
Yeah,
sense.
absolutely.
Sticking with the Fed, Treasury Secretary Scott Bessent has apparently this week met with Kevin Warsh, Larry Lindsey, and Jim Bullard, all former Fed officials, as his search for a successor to Fed Chair Powell continues. This is CNBC citing sources familiar with the matter. They didn't mention this in the article, but I'm going to mention it because David Zervos was also at the Treasury Department this week. I think he was there on Tuesday.
Lad.
Don't know whether he was there for an interview or just a chat or, just doing some sightseeing, but thought it was worth mentioning. Bessent is going to interview sitting Fed members. Obviously, we know that Waller and Bowman are on this 11-person, I was going to say shortlist, but actually long list for the Fed chair job. But he's going to wait until the end of the Fed's blackout period in order to do that. So those interviews will not take place until the back end of next week. And lastly, just to end with 3 stories here in the UK. Firstly, we had the July GDP data out this morning, the economy having stagnated on a month-on-month basis in July, which in turn dragged the rolling 3-month pace of growth down to 0.2%, down from a prior 0.3. I would just say 2 things on this. One is that the monthly GDP data, not necessarily in the UK, just anywhere it's produced, is far too noisy to be of any use whatsoever. There is very, very little signal that we can extract from the data. And secondly, and in light of that, given all of the issues that the ONS are having with data that actually matters, whether that be inflation, whether that be the labour market, whether that be trade, retail sales, whatever, I think at this point they should probably just scrap these monthly GDP numbers and refocus their efforts on actually fixing the data that we need to know about, like the jobs data that's been broken for 2.5 years now.
Because just on it, because I've obviously, GDP, yes, we need to know what GDP is doing, but it couldn't be more backwards looking, right? So I don't think it's really going to move the dial in terms of what BOE is doing. So it would, I agree with you. I'd really rather focus on inflation data, jobs data, etc. Just quickly before you move on from this, though, another classic quote from our dear friend and fan of the show, Rachel Reeves.
Oh no!
Yesterday, I haven't seen anything yet today. She's probably keeping her head low. If she's got any sense, she would do. She was quoted yesterday on Britain's economy as saying, "It isn't broken, but it does feel a bit stuck." Yeah, no shit. Thanks for that, Rach.
But also,
more from the
who's in
brain
charge
trust
of
later
getting it
on.
unstuck?
Well, this is it. It's what? Torsten Bell's going to unstick it, I'm sure.
Oh God, yeah, of course he is.
Torsten
Christ.
Bell.
Anyway.
Sorry.
Moving very quickly on from that, two bits of good news here in the UK that I can end with this morning.
Oh,
the first is, especially for Tom Talks Cars, OpenAI and Nvidia. They're going to announce billions in investment in data centers here in the UK. This is, of course, ahead of President Trump's state visit next week. That is going to be accompanied, or Trump is going to be accompanied, I should say, by a whole host of tech CEOs. I think Sam Altman, Jensen Huang, etc., are all coming over. And last but by no means least from me for the time being, JP Morgan, they are drawing up plans for a possible 2 million square foot office in London. Apparently they've owned some land in Canary Wharf, yuck, for a number of years, probably getting on for 20 years, and they want to develop that into a brand new office for the firm. So that would be a bit of a very big vote of confidence, not only in the UK, but also in the city and financial services here in the UK, if they were to go ahead with that project. So let's hope that they do.
Nice one. Well, unfortunately, Rachel Reeves, etc., is going to take this as a win from their point of view. But let's be honest, London is the centre of finance, along with New York, regardless of who's in power. So I'll be a little bit
Yeah.
miffed if they're taking responsibility for that for no reason. But yeah, there we have it. Right, good. Thanks for that, Mr. Michael Brown. Just one quick note. Our dear friend Straubs did message while you were talking regarding coats and Lagarde's, the first signs of autumn stuff. It'll soon be time for my lucky blue coat to come out, and I'll be walking around the city of London, look like I'm dressed up in boiler lagging, so everyone's got that to look forward to. But anyway, moving forward, so going to read out some of the selected headlines from the overnight news roundup, courtesy of our dear friend Zach. Do follow Zach, do subscribe to the Substack, etc. Get all of the overnight news headlines directly into your inbox, yada, yada, yada. Macro news. US pressures G7 on Russia sanctions. The US will pressure G7 sanctions in today's finance minister video call to hit India and China with sharply higher tariffs, 50 to 100%, for buying Russian oil, attempting to force Moscow into peace talks with Ukraine. Obviously, we've already spoken about Federal Reserve a little bit, but obviously that's a hot topic. Fed policy drama intensifies. Is the headline, really. The Senate kept the door open for Trump's economic advisor, Stephen Mirren, to join the Federal Reserve's policy setting committee in time for next week's rate vote, with full Senate confirmation planned on Monday. Meanwhile, Trump's lawyers asked for a federal appeals court to let its bid to fire Lisa Cook take effect. Yada, yada, yada. China Economic Data Watch. Chinese factory production data due Monday is expected to show a slight slowdown of 5.6% year-on-year growth in August, down from 5.7%. Retail sales growth may pick up slightly to 3.8% after the weakest gain all year, while fixed asset investment is likely had its slowest expansion in almost half a decade, according to Bloomberg. Goldman's, they've made a bold China oil call. Goldman Sachs expected China to accelerate crude stockpiling through 2026 as lower prices and energy security concerns drive buying. Despite this, the bullish stockpiling forecasts, Goldman still sees Brent falling to the mid-$50 area next year. ECB shift. JP Morgan expects just one ECB rate cut this year in December, pushing back their October cut forecast after the central bank maintained an upbeat view on growth and inflation. UK economic stagnation. The UK economic stagnated in July, marking a tepid start to Q3 as consumers and businesses face headwinds from tax rises and tariffs. As I know we've already spoken about this, but my concern is if we're already showing stagnation, it's only going to get worse because nothing's got better since then.
Well, and of course, the other thing is we've locked in 3 months of uncertainty in the run up to the budget,
Yeah,
which is on the 26th of November,
yeah,
and then probably 3 months of chaos
yeah.
after the budget as we adjust to another round of tax hikes and God only knows whatever else is going to be pulled
Exactly
out
that.
of the
Exactly
hat.
that. I'd be unless there's some kind, unless the Oasis effect kicks in massively, I think we could be negative growth in the third quarter. Although I
Oh,
do
you
thinking
wouldn't
on
be
it,
surprised.
I do genuinely think that we'll see some Oasis mentioned in economic data for Q3 because I believe it did have a little bit of a move on the dial. Russia, Poland drone incidents, geopolitical news. Trump said Russia's drone incursion into Poland could have been a mistake, telling reporters, quote, "I'm not happy about anything to do with this whole situation, but hopefully that's going to come to an end." Thanks for that, Mr. Trump. China's military presence.
Insightful as ever.
Yep. China's military presence. China's biggest and most advanced aircraft carrier, the Fujin, might have butchered that pronunciation, sorry, was spotted in the East China Sea by Japan's self-defense forces, the first time Japan has sighted this vessel. Equity names, tech giants make moves. Microsoft and OpenAI, as Michael was saying, this was a different story. Microsoft and OpenAI signed a memorandum of understanding for their next partnership phase, helping smooth OpenAI's path to restructuring as a for-profit company. Microsoft also plans significant investments in its own AI model, training infrastructure to compete with OpenAI and Anthropic. I think, as someone did mention yesterday, it feels like you do need the most advanced AI software or whatever just to understand OpenAI's kind of ownership corporate structure, because it just seems all very muddled. We know Microsoft are part of OpenAI in some shape or form, but also Microsoft are very much pushing forward with competitors competing with OpenAI. So, yeah. someone can explain that to me on the back of a postage stamp, it'd be much appreciated.
I'm sure Tom is already typing up
Oh, I
a
can't
rant
wait.
to explain it.
I can't wait for it. Memory chip surge. Micron informed channels it will increase storage production prices by 20 to 30% due to significant supply shortages relative to customer demand. Meanwhile, HK Hynix hit a record high after announcing completion of the world's first HBM4 memory chip development.
Good.
Adobe beats expectations. Adobe raised its fiscal 2025 revenue and profit forecast, signaling strong demand for design software and increased AI tool monetization. Shares rose 3% after hours. China tech rally. Alibaba shares surged as investors cheered recent AI development moves. Meituan launched a new AI agent app to boost food delivery services in its battle with Alibaba for Chinese customers. Luxury retail warning. RH trimmed its full-year outlook, citing higher tariff costs and uncertainty, calling it a higher-risk business environment. Shares fell 5% after hours. And finally, from me, before I hand back to you, Banco Sabadell's board again rejected BBVA's $18 billion takeover bid as insufficient, raising pressure on BBVA despite its vow not to improve the offer. And that's it from me. Back to you in the studio.
Good stuff. Thank you, Ryan. In terms of today, then, there is not much going on, to be completely
And
honest
that's
with
the
you.
end of the show.
The data docket is relatively barren. Now we've had the GDP stats out of the UK this morning. We do have the preliminary read on consumer sentiment from the University of Michigan due this afternoon. That index is expected at 58, down from a prior 58.2. Although all the usual caveats around the tiny survey sample size and the political skew within the data must continue to apply. Other than that, there are likely to be plenty of ECB speakers throughout the day. There are 3 scheduled on the Bloomberg calendar, but we've already heard from 6 this morning, and it's not even 9 o'clock yet. So I think if anyone's making a market on that one, they're going to be in profit if they bought 10 this morning. But other than that, of course, the Fed and the BOE both in their pre-meeting blackout periods. And just on that, of course, next week is shaping up to be a very, very busy week indeed. Not only do we have that FOMC meeting or decision next Wednesday, where the Fed will be delivering a 25 basis point cut, their first cut since December last year. We've also got a BOE decision next week, a decision from the Norges Bank, a decision from the Bank of Japan, plenty of UK data in the mix as well, with jobs, inflation and retail sales due. We've also got retail sales from the States as well. And I think in light of all of, a Bank of Canada decision next week as well as all of that.
Oh,
And I think in light of
Canada.
that, I think in light of that, you are likely to see trade rather tentative today. No one's going to be wanting to do too much on a Friday before an absolute deluge of event risk and a bit of a monster week next week. So do bear that in mind if you are trading today. And lastly, just the usual warning around the potential for any gapping risk over the weekend. If we do see any trade, tariff, geopolitical, Fed or any other notable headlines as we move through the next few days. But otherwise, for this morning and for this week, that is all from me.
And that is all from me. Everyone, thank you so much for tuning in today and this week, especially our regular listeners. We really do appreciate you, all that
Most of them.
jazz. Whatever you're doing today, keep it tight, stay safe. I think I speak for Michael as well when I wish you all a phenomenal weekend. Be kind to each other. And we'll see you all on Monday. Have a good one. Much love.
Indeed. Bye for now.